Hey gang, Raghee here. Welcome to Top Tier Outlook for the very first week of the new quarter, for the first week of the new month, and stoked to have Q3 behind us, going into Q4. And I was just writing up Top Tier Outlook earlier this morning. It's all ready to go, by the way, and that means tomorrow morning we'll have that available in the Top Tier Outlook section of the Simpler Trading Dashboard. And of course, all Sector Secrets Mastery folks get the Top Tier Outlook included with their subscription. So one of the things I mentioned was really the main wild card that we all know is out there, and yet we all know how the story ends. So it's as if we're going to go see Jaws 19, and we know Jaws is going to eat a bunch of people and it's going to be scary, but then we know they're going to get Jaws. We know how the shark movie ends, right? I think we know how this government shutdown movie ends as well. It's going to be really ugly, and there's going to be a lot of suspense, and we're going to want to close our eyes a few times, and then all of a sudden, it's done. So we've been here before. It's not necessarily good or bad news that's so tough to trade. It's the uncertainty, right? So in the near term, we're uncertain about the continuing resolution. We're uncertain about when it's going to be completed. We just know that it will be, right? And so I will tell you, we're looking at the open right now, by the way, and you can see where we opened. So this was the close. Here's your open. In fact, that's not even the close. Here's your 1600, 4 o'clock Eastern close. And then here we are to start Sunday. And this isn't really the open either. We'll see where we are tomorrow at 9:30. But here we are going into the fresh week, where we are waiting to see if the continuing resolution will be signed, or I don't care what these people do, just get it done, right? And I want to get this one narrative out of the way, because the narrative that should dominate most of Q4, the narrative that should be what benefits us, is the one that says, and my glasses are dirty, is the one that says, where are asset managers putting capital to work? Where are those waves of money that we can go surf? And ultimately, that's where I want to be. And I spent a lot of time pinpointing the early, sort of the front runners by way of sector and index in Top Tier Outlook. But let me give you a little bit of a sneak peek at what it is I'm thinking, at what it is we're doing. And of course, if you have any questions, feel free to type them on in. And it's the NASDAQ. I want to start with the NAS. The reason being, and I'm going to tell you all something, as much as we talk about sector weighting and high concentration weighting and relative performance, realize, gang, if you understand that, the advantage that you have on most traders is it's immeasurable. It really is. And here's why. And I talked about 3 things in this week's Top Tier Outlook, but let me give you one of the most important. What does relative performance mean to you, to me, to anybody? And to most folks, it's just something we say. And if you ask somebody, well, I'm looking for relative performance, and then you ask, well, relative to what? And they might say, well, relative to all the laggers and leaders, relative to whatever's flashing on the bottom of whatever station somebody has on, relative to technical criteria. But what if I told you there's only one true relative performance that matters, and that's going to simplify your life? And you might say, okay, Rog, what is it? What's the $64,000? It's relative performance according to sector weighting. Ta-da! That's it. And the reason that is because sectors are weighted in the indices. Sectors have extremely popular ETFs, where money and opinion, whenever you hear money, think opinion, right? Don't think right, wrong, just think opinion, where money goes. And if I know that there is ultimately money flowing into these ETFs, these ETFs can reflect the indices, the sectors, certain commodities, even currencies, treasuries, metals, right? I can see the way in which that quote unquote money is likely going to then dictate what's going to happen at the index level. All right, let me give you an example. All right. NASDAQ. Why do I like the NASDAQ? Rod, why tech? I don't pick favorites, gang. You know how often, I'll tell you, and I always respect folks who are coming out to our shows. It's a Sunday evening, and you can be doing 1,000 other things, but instead you're trying to listen to someone who's hopefully made the mistakes so you don't have to make them as badly, and trying to get better as a trader. And I respect that to infinity plus one. But this is the thing. We'll start up Charts and Coffee tomorrow, and inevitably people are going to ask me about SPX and QQQ and Tesla, right? Now, SPX, why? It's the popular kid in class right now. The only reason I'm ever interested in the SPX, and I had an entire 13-minute video on SPX day trading levels and the importance of the S&P futures. It's back at the Simpler Trading YouTube channel. It's back at my YouTube channel. Please watch it. If it's something you're saying, Rog, are you telling me not to trade the SPX? Oh gosh, of course not. It's a great symbol. But it's only great when the clarity at the S&P futures level is there. And it's only great when the clarity of the S&P is there in a way that supersedes everything else, right? So let me show you what I mean. So S&P is really this: XLK, XLF, and XLV. Now, some of my traders that are in the Sector Secrets Mastery probably caught this. It's really subtle. But of the three, I'll do it again. Here's XLK, which is in a little bit of trouble. I won't say it's not. It's in a little bit of trouble because it's showing early signs of weakness. Here's XLF, and here's XLK. The one thing that XLK has versus XLV and XLF, it is the only one, despite that little wobble to possibly a red trend, which is far from certain, it's the only one that's above the 200-period exponential moving average. And it's probably the only one above the 200-period simple moving average as well. There's other things I could do. I could anchor a VWAP, a volume weighted average price. But this right here, the simplicity of looking at that 200 tells me from a relative performance standpoint, even better. If I've got the zero, if I get the white lines, think of that as the equator, right? And then there's the bullish hemisphere and the bearish hemisphere. It really sometimes is that simple. So if XLK looks better than XLF and XLV, that's going to disproportionately benefit the NASDAQ. If XLC, communications, is also above that key level, and XLY, which by the way is my least favorite of the high concentration weighted sectors of the NASDAQ. And then lastly, sort of the honorary fourth sector, SMH, if all four of these are above the 200, it's hard to bet against the NASDAQ. Now, if healthcare and financials play catch up to tech, then, well, everything's going to benefit. NASDAQ will go up, S&P will go up, Dow will go up. Most people are just looking at levels on the ES, which is fine. But if you think that ES is a motor and those sectors as cylinders, the motors can only fire as well as the cylinders are, right? And if I'm not getting proper combustion in those cylinders, my motor is going to be limping along. NASDAQ's motor is not limping along. The worst of the sectors and that index relationship is here, the Russell. The Russell did go into a downtrend. KRE has yet to get its head above the 200 at any point this year, right? That regional bank nervousness may not be making the headlines, the merry-go-round headlines about regional bank crisis, higher yields, stricter regulations on regional banks, high concentration in certain geographies and industries, but it's back there. I don't have to hear that every day. I can just look at price action and say, gosh, this thing, since the breakdown in March, has yet to get above the equator. And you might think, Rod, that's kind of simple. Simple does tend to work. I think one of the things a lot of traders forget is, as much as we love to think everything's about the computers and everything's, I have the book, what is it called? I don't have my distance glasses on. I can't even read it from here. That book about Simons, the guy from Renaissance. Oh my gosh, I really need my distance glasses. So, wish I could remember these are, maybe these are it. Let's see if these are the distance glasses or not. And survey says, no, Oh, but these are a little bit clear. Let's stick with these. I think a lot of folks think we need these mathematical, sophisticated, high-level, number crunching, sort of $1 million computer type thinking. You know, that's what those guys use, right? The folks at Renaissance, Simons. At the end of the day, some of the most powerful things we can look at are actually the things that most people see. Because if everyone's looking at them, so the popularity of a tool is helpful. There's a certain element of technical analysis, and I know technicians lose their minds, but this is actually not all that it is, but a very powerful part of technical analysis is a self-fulfilling prophecy. I'm going to feel bearish below the 200. And if you take me and you and everyone here in the room and multiply it out by millions, all of a sudden, there's enough people looking at a very easy to identify level. Oh, that's why I don't wear these. These are crooked. There's enough people that are looking at an easy to identify level thinking the same thing, right? So it doesn't actually behoove us to get too cutesy about things that we're looking at on the chart. So this is where if you find a stock below the 200 and we're going into the last quarter, know the difference between something sort of in trouble or bearish, something that is cheap, and something of value that's simply on sale. And most of that is going to be found in the NASDAQ. Yes, we can find a number of stocks that are just in absolute downtrends. Look at Nike. This is, and I know Nike's having a nice start to the quarter here. There will be some bottom picking. Absolutely. You're going to find a lot of hammered stocks are going to find some flow. But our best bet's going to be try to find things that are still above the 200 that are on sale, right? But remember, this is bottom picking season. And you're going to see a lot of, hey, what's been hammered hard over the last quarter? And then how can we take advantage of possibly a move higher? If there is a sector in the NASDAQ that's going to benefit from that, it's probably going to be consumer discretionary. So all roads for me lead to NASDAQ, sectors around the NASDAQ, semis, and that's where I'm going to be looking for stocks and ETFs that are near their 200. Start there. That's not the only thing we want to look for. We want to make sure they're either in sideways markets or uptrends. We want to make sure that they're likely oversold. Look at the XLY. This is a great example of the 200 plus my Darvis. I went into a lot of detail, by the way, on Darvis. This is not a traditional Darvis box, by the way. I don't want anyone thinking this is Nicholas Darvis's box. Although this is rooted in the things that Darvis boxes would be drawn upon, but we modernized it, right? So rather than give it some fancy name, I like to pay homage to those traders that started that creative process, that got me thinking about it, that opened the door. And I love that we call this Darvis 2.0. We have a Darvis 2.0, and this thing's so great, we have a Darvis 3.0. And the idea here is, can we take something that's been used for about 70 years, 70, almost 70 years, say, hey, how can we make this work for today's markets? There's a support level. There's a 200. There's a minor low, which, by the way, is part of the Darvis box in the way that we've modernized it. There's your oversold stochastic, all happening in a neutral market. That is having a lot of Ys and a stacked set of indicators telling us, I don't want to short down here. This is potentially a buy. So I hope that resonates, gang. Waiting for some questions here to pop through. Yeah, so if we're looking at the NASDAQ, there we go. Mr. Walker, if I'm looking at the NASDAQ, I'm going to wait for, hang on, let me go on over there. I'm going to wait for the NQ to give me a signal. I've got some Darvis levels in play here. I'd like to see a minor low. I really would need price to move down to either this double Darvis zone down in here or the daily price movement range. Oh, by the way, speaking of daily price movement ranges, the Lorna bot just sent me brand new. Hey, bot, we're updating daily price movement ranges and the hourly price movement ranges. I just got some, I see the DPMRs for October 1, and we just updated the HPMRs, right? So the HPMRs are dated, sometimes I lose track of my own awesome indicators. So the HPMRs were updated really recently as of, for those of you that are subscribers, September 24. Oh, so those are right fresh out of the oven. All right. Absolutely. So September 24th, so that was very recent. And we just updated the DPMRs. So everything should be fresh as of tomorrow afternoon. That should be posted for subscribers. We'll have fresh set of daily price movement ranges. We'll have one for the new quarter. We're looking for swings. We're going to start looking at the 1 hour and the daily time frame, trying to get some overnight exposure to add to the super active, actually super successful day trading that we've been doing for the past couple of months. So there are the DPMRs and HPMRs. DPMRs will be fresh as of tomorrow afternoon. You should get the email, and the HPMRs just went out on the 24th. So very cool. So the DPMRs won't be that much different, likely, although I shouldn't say that because it depends on the expansion and contraction of the data, 6 months of data. So I really shouldn't say that. I don't know yet because I just got it from the bot. But they usually are different enough where the accuracy is going to be far better when you get the fresh one. So roughly in that area, but not precisely. And this is the old version. So remember, they'll tweak a little bit. They'll tweak a little bit, and that little bit can make the difference between getting into a trade, missing a trade. And so I'm going to be looking for a daily price movement range entry if I don't get the Darvis. If I don't get the Darvis. Okay. All right. Next up is, and I don't use TQQQ. I don't play the leveraged. Okay. I don't play the leverage, my friend. I just go either NQ or QQQ. All right. Is the book I were trying to tell us about? Oh, not Reminiscence. No, hang on. I'll tell you right now. It's a book about Jim Simons and what is it called? The Man Who Solved the Market. How Jim Simons launched the quant revolution. All right. So that's the name of the book. Hang on, let me see if I can't find it. I was trying to read the here it is. I was trying to read the side of the. I was trying to read the binder. That's it right there. It's a really good book, but my problem with this is all of a sudden everybody thinks this stuff is trading. That I need this high level, and all I'm saying is get there if you want to get there, but start with the basic stuff, right? Are we above or below the 200? Or do we have a trend? Do we not have a trend? Is something actually in a downtrend, or is it really retracing within the context of chop or an uptrend, right? So actually, it's The Man Who Solved the Market. I haven't read that since it first came out. I might want to go thumb through that again, but I have a love-hate relationship with this stuff, right? How Jim Simons launched the quant revolution, because all of a sudden your retail traders think, I need to be Jim Simons. Not even high-end hedgies can be Jim Simons. He's doing something that really at a level that no one else has done for a very long time. And I don't need to be that fancy. I just need to know how to follow, because all these guys move size. Let them be fancy, right? I don't make the waves. I surf the waves. And I think a lot of traders forget that. They start to act like something other than what they are, which is a retail trader. I'm a retail trader. I'm very proud of that. It's my money, and I look to multiply it. I think that once we start getting too ahead of ourselves, we start getting the big short syndrome, we start getting, Jim Simons syndrome, we forget where we are on the food chain, right? But I love this book. And Reminiscence is a fantastic book. Absolutely. All right. So let's jump on over to another question here. E-mini, S&P. I'm not going to day trade it tonight. But tomorrow, one of the things I was mentioning, especially on those of you that watch the SPX, Friday we launched into the DPMR, so I would expect movement higher, and I would expect movement higher. In the S&P, you can see here, S&P futures, that actually gave us a better SPX, SPY, and ES signal on the daily than the SPY or SPX could possibly generate, because as I mentioned in the video, please check that video out, gang. If you haven't yet, I really just completely went total workshop on that video back at the Simpler Trading YouTube channel. Most of you are on that right now, or my YouTube channel. I went total workshop on that video because I think a lot of traders are frustrated as to, why they're not getting more out of the market right now. And I just really wanted to say, you know what? Here's what I'm doing. Here's what myself and the folks in the Sector Secrets Mastery are doing. Here's what's working. And that's that video right here. Almost 2,000 views. Wow. This right here. And what we went over are a couple really cool manual. You don't have to buy anything from me. There's no class you have to take. Although I won't kid you, if you took this recent day trading class we took, all of this is, yeah, Rog, we know this. We've been doing it for 3 weeks, and we had 100% win rate last week. So I know those of you that took the class got a lot of, have all this on your charts already. You know what to do with it. You know what the setups are. But I really wanted some folks to know that, well, there is a process that you can do. There are some manual levels you can put to use, and hopefully, helps you turn the corner on a little bit of clarity and confidence. So check it out. SPX and Darvis posted on Friday. Yeah, check it out. If you have any questions, feel free to post it. So CA, I would say that for the most part, it's that S&P setup into the DPMR and the 200 that we saw back on the 27th. And I'm looking for follow through really from that. And if S&P moves higher, NASDAQ is absolutely going to move higher as well. All right. Grant asks, where do we get and learn the Darvis indicators? The Darvis 2.0, Grant, I've made available for free for a very long time. If you're on TradingView, you could just go into TradingView indicator search, look for Simpler Darvis, and you'll see it. We've made that available since 2016. It's a great indicator. Darvis Signals is the premium version. My day trading folks, you have that. So if you already took my day trading class, you already have the Darvis 3.0. Darvis 2.0 is the free version. And then you can download that and put that on your charts. Make sure that the one you click on does not have a little lock on it, right? That's the premium version. Make sure that the version you click on does not have the little lock on it. Make sure it's Simpler's version, because that's the formula that I use. That's the coding I use. All right. Mike R asks, are the HPMRs included in my mastery, or is it a separate fee for the indicators? Mike, there's a bunch of indicators that I do make available in the mastery. Multi-trend's one of them, my custom slow stow, and a bunch of other things, including the indicator that I walked y'all through on Friday's video that gives you that great zone to understand price movement and sentiment right off the bat, the little clearing range, 5-minute clearing. However, the full HPMR is premium, but the indices, Russell, NASDAQ, S&P, Dow, and the associated ETFs, right? So DIA, IWM, SPY, QQQ, those are free in the mastery. And those are the most popular ones. And we give those 8 symbols in total, the indices, in the mastery. And if you want the whole HPMR, yes, that's a separate fee. However, that's why I always tell folks when the class comes around every year, re-up, because it's free with the class. So you take a class with me, you get a refresher on how I'm trading, and oh yeah, you get a certain amount of access to the HPMRs included with the class. So we make it really easy to keep that subscription going without, paying an arm and a leg. All right, Yee. Last week was so volatile. How you doing, my friend? Great to see you. Last week was so volatile, but we did great with day trading. The tools just work, because we keep it simple, right, my friend? We keep it really simple. We remember we're retail traders. We're not trying to be Jim Simons or the Big Short or whatever else. And we just surf the waves, right? Which I love. All right. Oh, that's awesome. Awesome. All right. Last question for the day. Emily asks, on the ES daily sure looks interesting right there at the 200. It sure does. Emily, I'm with you. Does the slow so suggest it might be ready to bounce off it? If we have a sideways market, which is when the multi-trend, the lower row, these colors, that's the multi-trend. When those colors are yellow, absolutely. So we hit the daily price movement range and the 200. What a stacked level, right? On the 27th, we shifted from red to green on the slow stow on the 27th. And the signal is almost a nag. not an early detection, right? First, we'll get the transition, the color, then we'll get the, hey, did you see that we have a switch? And there's your signal. And then that's I would say so, Emily. The pieces are there. Now, I again want to make sure financials and healthcare at least are bogging the S&P down. Tech's doing something similar, and keep an eye on the NAS. But let's see what we got. We'll be together at 9 o'clock tomorrow for charts and coffee. Let's see how the early part of the New York morning goes, and we'll get a good idea of how Asian session, European session, UK session, early US is behaving. We'll probably get some news on. Let's see here. Hang on, let me log into my news thingy. I don't trade the news, but I do want to know what's freaking the market out, and probably none more important than. And why are we up? Probably because. Why are we gapping up today? Probably because last time I checked, around 5, I think I heard that there's a stopgap bill either getting voted on or that Congress passed. So, we're going to get a little bit of a reprieve on this concern about the government shutdown. So we're not going to get a shutdown is what it's looking like. Even if I didn't see that news, the gap up tells me, right? We're not going to get that shutdown. Okay, gang, have a great one. I'll see you in the morning for charts and coffee. Be good to each other. I'll talk with you soon.